Minutes.
Thank you, Madam Chair. Mr. Kelley, thanks for coming in. A real quick question. This is to piggyback off of the final question from Mr. Muser dealing with the 504 Express program and when essentially the regs were going to be written for this program. You said shortly. What does that mean?
It means in the next 30 days or so in terms of being published.
Okay, so in 30 days, that should be out there so small businesses can take advantage of this.
Yes.
Okay, all right. Wanted to get some more clarification because words have meaning here, in our process. Real quick question. So what is the impact, in your view, of the rising interest rate environment on the 7A program, on the 504 program? Obviously, the Fed is on the move. In my view, they're late to the game. They should have been doing this earlier, considering the inflationary environment. But what's your view of the impact of rising interest rates on those programs?
Well, it makes the product that much more valuable for the small business borrower that receives it. So, for example, you referenced 504. That's a fixed rate tool. So obviously borrowing with money today and paying back later is an advantage with a fixed rate note. And while the rate has gone up 50 basis points in the last couple weeks to a point on the baseline rate, overall, the base rate is still low historically. So the other advantage of these particular products is that they allow for longer amortization periods, which lowers the monthly debt service associated with the debt, which means that there's less cash going to the debt. And for companies that have to pivot, companies that are looking for growth, business acquisition tool in the 7A program, for which 30% annually loan proceeds go to, is an excellent opportunity to buy a business with little to no money down in the particular program.
Let me ask you this question, because you mentioned your private sector experience. I had to go into another hearing. Mm-hmm. So real quick, just can you give me a quick 15 seconds on what your private sector experience was?
Sure. I worked for a community bank based in Wilmington, North Carolina, that makes loans nationwide to small businesses for about 6 years. Prior to the Obama administration, I worked for Schulte, Roth & Zabel, which is a law firm in New York City. Worked mostly on M&A as well as structured finance. Prior to law school, I worked for a for-profit educational company that helped children with ages 4 to 14 with enrichment and remediation. That was a retail store, ran a P&L for that, and then worked for Chubb Insurance Company as well as Merrill Lynch in the muni bond division in the late 90s.
Okay, so let me ask you this question. So we have roughly 30 million small businesses in the United States. Capital is basically required by everybody. What is the capability of SBA through direct lending to actually take what part of the market share do you anticipate SBA can actually access?
So I would reference the previous Congresswoman's point about women-owned borrowers and earlier references to startups.
But hold on, Mr. Kelley. I got a minute 33. If you guys are talking about doing direct lending, of all the small businesses that exist that are looking for capital, what percentage of overall small businesses? You guys have had to do some analysis on this. Just what's the percentage? 10% of small businesses, 25%, 30%? What do you think SBA's real capacity is and capability?
So I don't know the total capacity. What I can say based on market demand is that the hardest challenge, and Chairwoman Velasquez referenced this in her opening statement, there's been a dearth or a decline in loans, particularly under $50,000.
You do know why that is, right? We've shut down community banking in the United States through Dodd-Frank regulation. In my congressional district, we had 75 community banks when I was in community banking. 75. Now we have 5. It's 10 years, 15 years. From 75 to 5. That's what Washington has done. So my question is, and again, because now I'm down to 25, 28. My question is very, very simple. If SBA was going to go out and do direct lending, essentially create a federally controlled bank, if you were going to go out in the private markets and make your own bank, you would have to have an understanding of what percentage of the market you were going to be able to anticipate counting on as customers. So what percentage of the overall market does SBA have the capacity to actually take on as direct lending customers?
So I assume you're referencing to this committee's language that was put in the Build Back Better bill with respect to direct lending. If that's the case, in particular, what that language called for, and I think it was appropriate, was for funding loans under $150,000. And what the language sought to do was to create parity between the SBA's direct loan, for which the agency has direct lending authority today and has had it historically, to make small dollar loans for which there is a gap and there is an efficiency challenge recognized by all banks.
Only thing I
Time
would
has
argue
expired.
is I don't think the SBA really has a clue of what its capacity really is.
Time has